There are so many different low-tax jurisdictions with different taxes, rules and laws that can easily confuse you. I remember about 5 years ago when I was still living in Germany, the only thing I really knew was that I want to leave the country. But where should I go? I did a big research and got confused even more. Portugal, Malta, Cyprus, Dubai, Hong Kong and whatever there is. All of these countries have their advantages but also disadvantages. And so I made a detailed list about the most important things that you need to know. If you're an entrepreneur or business owner that wants to pay lower taxes legally, then listen carefully. Hey everybody, it's Ricardo Gorski, the founder of Tax.One, where we help individuals and businesses relocate to low-tax jurisdictions. And in this video, I'm going to talk about the 7 best low-tax jurisdictions you can move to. But before we start, it's very important to mention that taxes is such a complicated and individual topic that in any case, it's always important to have an individual consultation call. In this video, I'm talking about the general tax situation of each jurisdiction that applies to most of the people, but not to everyone. There are always individual things that we need to consider and keep in mind for your unique situation. Before we start with number 1, you need to know that I'm focusing on countries that you can actually live in, not some weird island that you can't even pronounce the name of or where you're afraid to go down the street. I'm presenting you the best low-tax jurisdictions with high living standards. So with that being said, let's start with number 1, and that is the country that I actually reside in at the moment, and that is Cyprus. Cyprus has an official corporate tax of 12.5%, but there is a special tax regime which is called the IP box regime, where you can pay as little as 2.5% in corporate tax with your Cyprus limited company if you have an intellectual property in your business. Then, whether you pay 12.5% or 2.5% or anything in between in corporate tax, after that, what we usually do here in Cyprus as tax residents is we pay ourselves a dividend. And the dividend tax in Cyprus is actually, if you Google it, 17%. But there's a so-called non-dom status for foreigners that moved to Cyprus and never lived in Cyprus before, where you can be exempt completely from that 17% dividend tax. However, there is a 2.65% healthcare contribution on your dividend income, but luckily this is kept at 180,000 euros. So if you pay yourself a dividend that is higher than that, the maximum you will pay is 4,770 per tax calendar year, no matter how much dividend you receive from all your worldwide companies and assets. So this is mostly interesting for business owners and entrepreneurs with their own company or with a partnership. But even for employed people, Cyprus also offers amazing tax benefits. Employed people can receive a 50% income tax reduction under specific circumstances. The personal income tax in Cyprus is actually progressive, so it starts at 0% and it goes up to 35%, but with the deduction, even the highest tax bracket is just about 17.5%. So even as an employed person, Cyprus is still attractive from a tax perspective. Depending on your annual income, you will pay somewhere between 0% and 17.5% in the best case scenario. So as an employee in Cyprus, your best case scenario for the total tax rate will be somewhere between 0% and 17.5% based on your annual income. As a business owner, it looks much better. The best case scenario for your total tax rate is 2.5%. Why? Because with the IP box regime, your company pays only 2.5% in corporate tax, and if your dividend is very high, if we are talking about millions, let's say as a high net worth individual, the 2.65% with the cap won't even make any difference to your total tax rate because it will be still 2.5001%. It's basically like a lump sum for you, you only pay 4.7k. Anyhow, for small and medium-sized businesses, the best case scenario is actually 12.5% corporate tax plus 2.65% in healthcare contribution, and then you will be somewhere around 15.15%. Next, Malta. Malta has a corporate tax of 35%, but non-resident shareholders of trading companies in Malta receive a 30% refund after a few years. And so the effective corporate tax is actually 5% in Malta, which is quite good. But for that setup to work, you actually need another non-resident entity, which will most likely be a holding company, and that actually bumps up your setup costs and also your management costs. So this is something you definitely need to keep in mind. And then, dividends in Malta are not subject to further tax, so the dividend tax is also 0% in Malta. Also, the income tax in Malta is 0 to 35% based on your annual income, but there's a special tax regime for expats that live in Malta, and that is 15%, so quite similar to Cyprus actually. So Malta, best case scenario for employed people is 15%, and best case scenario for entrepreneurs, business owners with their own company is actually 5%, with high running costs. So if we only focus on the taxes, Malta actually has a better, more attractive tax regime than in Cyprus for business owners and employed people. But what you need to keep in mind though is, as said earlier, it's a refund. So first you pay 35% and then you get a 30% refund from the government after literally months or years. And this refund system actually has been questioned in the past already. And this makes me think how long it will still exist, because the Malta authorities are actually already working on a new tax regime which might be completely different to the current one. My bold prediction is that Malta will change their refund system and increase their corporate tax, because they will receive a lot of pressure from other governments and the European Union and even the US most likely, because they will not accept the fact that they can have a 5% corporate tax and so many citizens are relocating to Malta for obvious reasons. In addition to that, I already see an increasing amount of individuals leaving Malta for reasons such as that the island doesn't really have a lot of nature, the island is very crowded, the infrastructure is not very good, so to say, for the amount of people that live on such a small island, which is very different than Cyprus, by the way. And even businesses are leaving Malta, such as the casino industry, which I'm very well connected to. But anyway, that's a topic for another video. We now continue with number 3, and that is the UAE. And gosh, the UAE is very interesting. The UAE, and specifically Dubai, didn't even exist just a few years ago. And now it's one of the most popular destinations for expats and entrepreneurs and crypto influencers and people of that sort. However, it's so much different from Cyprus and Malta because it's a non-EU jurisdiction. And this has advantages but also disadvantages. I actually think that a lot of people exaggerate when it comes to Europe. Don't get me wrong, I definitely see the totalitarian tendencies, WEF and other things I've read, oh well, but we can't disagree that Europe also has a lot of benefits such as free travel, strong economies and a relatively high living standard in most countries. Democracies, as much as we can call them here in Europe and European countries, are so much different, almost black and white, to the UAE, Dubai, where there is effectively a monarchy. The royal family effectively runs the country and they can do and decide whatever they want. If they want to implement a 9% corporate tax, they can do so. Oh wait, they already did that. So what started off as a tax haven is now a jurisdiction with quite some taxes actually. So coming back to taxes, all business activities in Dubai are taxed at a flat corporate tax rate of 9%. To the best of our knowledge, only real estate related income and personal investment income are currently tax-free. All other income is labeled as business activities subject to 9% corporate tax, and no, you can't bypass that with your salary. So by now you get the point with what I mean, that each jurisdiction is so different and individual. Yes, they have different tax regulations, but also the culture, the religion, the aesthetics, how the country looks like, what you can do there is so different. The people that live there, the businesses that relocate there, and the businesses that you can actually do there. This is why I always say you need an individual consultation call, and for that, reach out to us on Tax.One. Now, number 4 is even more interesting because 1, it's so different to the first 3 countries that we discussed, and 2, I actually already lived there and I loved it so much. And the country is Switzerland. So for now we had 2 islands with beach lifestyle, we had Dubai with skyscrapers and city lifestyle and super hot weather, and now we are talking about Switzerland with the Alps, lakes, swans and super beautiful nature. And I actually lived in Switzerland for about 4 months in 2019 and 2020, and back then I told myself that I will retire in Switzerland. Like literally, I never felt that peaceful, relaxed, calm in my life ever before. I lived in Lutry, Lausanne, et je parle un petit de français. And I had a beautiful view over the Lake Geneva and the Mont Blanc on the left side. I remember visualizing my dream property there by the lake with a loving family, playing golf in Italy on the weekends, during the week going on morning runs by the lake and playing with my kids. But realistically, it was too early. Yes, Switzerland does offer quite some nice tax advantages, especially in Zug. The corporate tax is relatively low, there is no tax on capital gains, and they have many tax exemptions and reductions, especially for high net worth individuals. For high net and ultra high net, Switzerland offers holding structures and other vehicles such as trusts, foundations, charities, and even the lump sum tax where you can pay very low taxes, while enjoying beautiful nature, security and privacy. But as said, mostly for high net worth individuals, we are talking about a net worth of at least 7 figures and above. Switzerland is a very complex jurisdiction, if not the most complicated jurisdiction in the world, and so I can only make general statements here. In my opinion, Switzerland is for people that already made it, for people and families that want to retire, and not for the upcoming entrepreneur or for startups, because the running costs and the fixed costs, they will eat you alive. And also the lump sum tax, for example, which is a very popular term and a lot of people know about it, but most of the people don't really benefit from the lump sum tax because they are simply not wealthy enough. If your net worth is 500,000, you can't pay 250,000 in a lump sum tax per year because after 2 years you will be broke. But if your net worth is 50 million, yeah, the lump sum tax makes quite sense. So again, Switzerland is a beautiful, beautiful country with certain tax benefits for high net worth individuals, and this is why Switzerland is in this top 7 list. And if you're interested in Switzerland, reach out to us on Tax.One and we will connect you with our associates there. Now, very interesting is the next one because it's quite similar to Switzerland in what we just discussed, and that country is Monaco. Monaco is an amazing country with insane networking and business opportunities, but again, it's not for everyone. Monaco is definitely old money, whereas Dubai, for example, is more like new money. Monaco has the highest percentage of millionaires and billionaires per capita in the whole world. Approximately 1 out of 3 residents is a millionaire. The reason for that is because Monaco has a 0% personal income tax since hundreds of years now. There is also no capital gains tax, no wealth tax, no inheritance tax, and no property tax, so it's literally perfect for wealthy people. However, there is actually a 25% corporate tax in Monaco for revenue generated outside of Monaco. So again, Monaco is not really for startups or trading entrepreneurs that are still in business. It's more for people that are already super wealthy, retired people, people that live off their investments, cash reserves, assets, or basically their family's money. This is also the reason why the rental prices in Monaco are literally insane. Like you have to pay 10,000–15,000 euros per month for a 2-bedroom apartment. So it actually really depends on you, what kind of person you are, what kind of lifestyle you prefer, and how wealthy you actually are. And this is why we have our application form at Tax.One, where we will examine your individual situation and recommend you the best low tax jurisdiction or no tax jurisdiction for your individual case. So we just discussed the 2 perfect destinations for high net worth individuals and ultra high net worth individuals, people that basically made it, so to say, and that live off their investments. However, now the last 2 are dedicated for upcoming entrepreneurs, startups, and people that are still in business and just on their way up. And for that, number 6 is Andorra. Andorra was under the radar for many years. However, recently I have the feeling that more and more people start to talk about Andorra and actually consider moving there. Andorra has a corporate tax of 10%, and with some reductions similar to the IP box regime of Cyprus, you can actually reduce your corporate tax down to 2%. The personal income tax in Andorra is also 10% flat, but also capital gains and dividends are taxed in Andorra at 10%, with the exception of profits from shares. Something very interesting for B2C and D2C businesses and people that run e-commerce stores, for example, with physical products shipping to the European Union is the low VAT rate of just 4.5%. In general, Andorra is super beautiful, definitely. They have amazing sceneries, mountains, nature, and if you Google Andorra, you will just see what kind of beautiful country it is. You wouldn't even think it's a country actually, because the population is 50,000. Like I thought Cyprus has a small population with 1 million, but 50,000 is a whole different caliber. But that's also the reason why it can be quite boring there actually, because all of the restaurants and places close at 6 p.m. and you can't really do much there, especially for younger kids. Like if you have kids or if you're young yourself, I don't know what you can do there except going into the mountains with goats and sheeps. Also, if you dig a little deeper, you will find some other disadvantages of Andorra, such as the government is actually very strict and even controlling. They don't allow multiple citizenships, and in order to become a citizen of Andorra and obtain their passport, you have to wait at least 10 years, in some cases even up to 20 years. However, if you're okay with all of that, your total tax rate will be 10%, which is definitely good, and it's a country with high living standards, and so I wanted to add Andorra here as well. But now the next one is even more feasible for most of you, and that is number 7, Romania. Romania is very beautiful, has amazing nature, architecture, a lot of activities you can do as a young person, and also offers a very interesting tax regime. I would actually consider Romania somewhere in the middle between Cyprus and Switzerland. Like, you don't have the beach lifestyle, the hot weather, the climate that I love so much, but you're also not in the Alps basically and live a retired life. It's basically in the middle with quite similar tax benefits. And coming from Germany, it reminds me very much of Germany and the beautiful old style buildings and the architecture that I miss so much here in Cyprus. Like, I love the Mediterranean lifestyle, yes, for sure, but sometimes I would just want to see a huge church like the Kölner Dom or just walk around the Altstadt. But yeah, regarding taxes, if you make less than 500,000 euros per year, your corporate tax is just 1%. Yes, you heard right, 1%. However, there is more to that. And that is, first, I don't really think it's sustainable because they will receive pressure from other countries. They already reduced the threshold from 1 million down to 500,000. And 2, there is also the dividend tax, of course. For Romanian tax residents, the dividend tax is 5%. However, capital gains are taxed at 10%. So again, it very much depends on your business activity, how you receive your money. Is it salary? Is it dividend? Is it capital gains? Are you into crypto? Are you into stocks? Are you into ETFs? Do you have a consultancy business? Do you have a software business where we can find an IP and then benefit from the IP box regime? Like, it's literally complicated. I can't say it otherwise. And this is why, again, you need an individual consultation call. You can reach out to us on Tax.One or you can talk to other service providers. It's totally up to you, but I want you to know that it's very complicated. You cannot know the perfect jurisdiction from watching videos. You have to actually visit the countries. You have to talk to professionals, to service providers, lawyers, accountants, tax advisors, and come up with a bulletproof solution, because we are not talking about peanuts here. We are talking about your business structure, a potential exit in the future, a new country that you will live in. So you definitely need to know what you're doing. And also important to mention is that we are talking about a full relocation here, like you're leaving your home country and you're moving to a new country. Only that setup is 100% legal and will not cause any issues in the future. Like, if you incorporate a company in Hong Kong and 20 years down the line, some auditor will do a manual review on your books, you think he will be like, oh, okay, he had a company in Hong Kong. How many times have you been to Hong Kong? 2 times for signing some documents. Like, don't tell me you think this is going to work. We don't live in 2005. But if you want to end up in jail, don't worry, go for it. But if you want to have the best legal low tax structure for you and your business and discuss the details, such as the tax residency requirements that I didn't even mention. Some countries require you to stay in the country for 6 months to enjoy its tax benefits, whereas others only require you to stay there for 60 days. I didn't even mention banking, the security and safety of the country, accounting and management costs, the culture, religion, politics of each jurisdiction. If you want to discuss all of that, reach out to us on Tax.One and we are happy to advise you in an individual consultation call. And if you subscribe to the channel, I will see you in the next video.